Hey traders and investor, welcome back to my channel. This is continuation to my previous video on how I manage the trading capital for FNO, and this is for investment for equities. In a volatile and unpredictable market, it is crucial to assess and mitigate the risk associated with the equity investments. Investing in equity can be highly rewarding, but it comes with its fair share of risk. To make informed decisions and protect your hard earned capital, it is crucial for you to understand and effectively manage these risks. Remember, a well managed risk is a step towards a prosperous future. So basically, this 10 lakh is the total capital that I have allocated for my equity investment, which I'll be using it for the pledge for the margin benefit. So 10 lakh is my total investment. I'll diversify that into 25 different companies, keeping a risk of 25% on each of those companies, which means for each stock I'll be risking a cap maximum of 25% as a risk, which is nothing but the stop loss. So I consider this as a 25 is to 25 is to 25 rule, which is nothing but 25 different companies, keeping a 25% of risk onto the whole account and 25% risk on each of the instruments that I'm trading. Let's say for simplification, I'm changing the last traded price, that is entry price, to 1000, which means I have this 25% rule in place. So my stop loss would be 250 rupees from my entry point. So let's say I'm entering into a trade at 1000. Then if the price reaches 750, I'll be exiting out of the trade. Simple as that. So keeping 25% rule, I'd be exiting at 750, and the quantity that I'll be entering into is 40. How the 40 is derived? 40 is based on the maximum risk that I'm taking onto the trade. So this is derived based on the risk that I'll be taking into consideration. Let's take a sample. Indigo stock is trading at 2500. So I'm changing the value of LTP from 1000 to the realistic value of 2500. Let's say I'm taking an entry in Indigo. I'll be entering at 2500, keeping a stop loss at 1875, and I'll be entering only 16 quantity into this trade. And at any point, if the price reaches 18750, I'll be exiting out of this trade. This is one sample. And I'm changing it for Tata Steel, which is trading at 110. I'm changing the value to 110. Now you can see the quantity changes to 364, which is nothing but I'll be entering into 364, keeping a risk of 10,000 per maximum and the stop loss at 82.5, which is 25% from my entry range. That is how I diversify the instrument and keeping a tight risk management. So this is my equity journal section, wherein I capture the information about the script and whether it has made the breakout already or it is yet to happen, and the rationale behind the trade, whether it is a technical reason or is it a fundamental reason. I more focus into the technical reason because I'm good at the charts. Hence, I prefer to be a technical investor, keeping in mind of different patterns like flag and pole, triangle, W, M pattern, triple top, any such breakouts. I'll go and pick and check whether it is going to reward me based on the risk which I'll be putting it across the table. Let's say these are the three different scripts which I have identified, and thinking that this would give a breakout or maybe giving me a good reward, keeping a risk intact. I have ICICI Lombard, Ashok Leyland and Tata Motors. Generally, I suggest for any short term or long term pick, one should look at from the higher time frame. Either it should be monthly or weekly. Further, they can get into the daily time frame. My general preference would be on weekly. So I'm just changing the range from daily to weekly. I'm just showing you a sample for ICICI Lombard. You can see a clear breakout happened with ICICI Lombard along with the stochastic crossover in a weekly time frame. Now let's get into the daily time frame. You can see a triangle or pennant breakout which is given a breakout high above 1200. So after this breakout, there is high likely to retest to the swing high, which is 1600 of this level. So I'm ready to take a entry onto this on Monday at the last traded price, which is 1332. Keeping a last swing, there is a gap filled, that there is a gap opened. You can see that near 1200 range or 1050. I'm going to keep a stop loss there, which is 20% from my entry point, which is well within my 25% rule limit. And the technical reason is a mini flag and pole breakout has happened on this particular stock. I have my entry at 1330, keeping 25% risk intact. I can easily go on for the target of 1600 levels. And this is my stop loss point, which I'm trying to mark now at 1100 levels. So I have a better risk reward of more than 1:1.17. And the suggested quantity here would be 30. For the reason I'm keeping 40k based on my 10 lakh capital, diversifying into 25 different companies. So my capital allocated would be 40k, and in reality I would be investing only with 30. If you do that 30 into 1330 math, you would be getting 39,900 as a capital deployed for this particular stock or a script. Likewise, I will do it for the other two different scripts, which is Ashok Leyland. I think that it has given a nice breakout looking into the weekly time frame. And monthly time frame, if you look, we see a good green candle closed with the stochastic crossover on a monthly basis. So June it has given the breakout, and there is high likely the price would be tested to 200 range, and I'm going to go for the 200 range target, keeping the last swing as my stop loss, which will be well within my 25% rule. And I see a stochastic crossover here in the daily time frame, so I'll be taking an entry onto the Ashok Leyland on Monday. And the stop loss would be my recent swing low, which is 140 would be my stop loss. If I go and put it back to my calculator, you would be able to see it will be with my 1:1 risk reward ratio, or it would be even better if 1:1.15 risk reward ratio, which is 1.167. You can see that. So the quantities I would be entering is 242 based on that 40k capital allocated for this particular script. Now let's look in for Tata Motors. Tata Motors, we can see in a monthly time frame, 3 white soldiers have formed with a clear breakout after a long consolidation. And getting back into the daily time frame, we are near the higher ranges, so it is going to give a breakout, and we can see that it has given a breakout in the monthly time frame. So it's a white soldier pattern. I think that this target, the Tata Motors would hit 800 or 900 minimum in next 3 to 4 quarters. So I'm keeping a target of 950 for this, with a stop loss around 500. So I have a 1:1.88 risk reward ratio. This is how generally I do a trading for equity. If you like my video, hit like button and subscribe my channel for more videos. The spreadsheet for this file is given into the link description. You can go ahead and download and modify as per your requirement. Thanks again.